Coming to our income tax class. Now we are discussing about business or profession. On that business or profession, in the previous session, we started how to treat scientific research expenditure. This is the video in continuation with treatment of scientific research expenditure. See, basically, you know very well what is a scientific research expenditure. Any activities for the extension of the knowledge for natural and applied science, amount spent for that scientific research, we can claim that amount as expenditure in the business. Claiming expenditure in the business in the sense are we permitted to take that amount in debit side of P&L account. So is it a eligible expenditure or not? That we have to test. So for that purpose we are having these informations under section 43.4. I read the definition under section 43.4. What is a scientific research? So any amount spent for the upgradation of the activities for the upgradation of that scientific research is eligible. Under section 43.4 we can take it eligible in the sense what we can take it in debit side of P&L account. That scientific research expenditure is broadly categorized into two. One is revenue expenditure, that is it is recurring in nature. Another one is that expenditure is capital in nature, that is capital expenditure. Okay, the first let us discuss about revenue expenditure. In revenue expenditure, any amount spent for the scientific research as revenue expenditure which are recurring in nature for the previous year is eligible for claiming in the current year. So present example, previous year is 22-23, the current assessment year is 23-24. So any amount you spend in the previous year of 22-23, right, it starts from April 1st to the May 31st of 23. Any amount spent coming under this category, then it is eligible. And if the amount of expenditure incurred before the commencement of the research, that is also eligible if it is incurred within 3 years prior to the commencement of the research, considered as pre-commencement research expenditure. That is taken under section 35.1.1, and that one is taken as in-house research. Now we will have another one question. What is called in-house research? In-house research in the sense I am having the research laboratory, research activities, right, for my business or for me, I am having that research, then it is called as in-house research. So any amount spent for that purpose under section 35.1.1, if it is eligible, then we can claim it as admissible expenditure. Here we can take or we cannot take. That means we can take in the sense it is considered as a allowable expenditure, right, eligible expenditure. Then another one, the deductions under section 35.1. What is that? In-house research expenditure is 100% eligible if it is spent for that purpose. Under what categories? If the amount is paid to research associations, right? Another one is the amount paid to research association, university, college, that is contributions to outsider. So we should know very clearly, first what I said is in-house research, then another one is amount of contributions made to any research association, university or the college under section 35.1.2 is eligible for 100% deduction. Previously we had a separate condition, please don't confuse those previous condition with this. Now it is only 100% eligible. Whether you are spending the amount whether you are spending the amount for revenue or capital, if it is revenue or capital in nature, it is eligible to claim If it is incurred in the previous year, for the current assessment year, you can claim it as 100%. What? See, I contributed the amount to Jawaharlal Nehru University. I contributed the amount to Madras University, Anna University, or IIT of Madras. I contributed 1 lakh rupees for the scientific research. Then the same 1 lakh I can claim it as deduction. Deduction in the sense allowable expenditure, right? Deduction means this is not the deduction of reducing the amount from other things. No, it is eligible to claim it as debit it as in P&L as eligible expenditure. Then second point we should know any amount paid to the company for the research. See, you should know the difference with this one and the previous one. Previous one is you are contributing the amount to that research associations, research institute, right? For example, to say Madras Eye Hospital, Anna University, Jawaharlal Nehru University, University of Madras, SRM University, right? JPR University, like that. If you are contributing the amount that coming under the previous point, that is a section 35(1)(2), 100% eligible, whether it is capital in nature or revenue in nature. Then this point is if the amount is paid to research any company who are engaged in scientific research. For example, to say Ranbaxy, and one company they prepared the vaccine for novel coronavirus, right? So if you are contributing the amount to that company, okay, so any of the contributions made to the company for the purpose of scientific research, it is also eligible, right? Provided some prerequisites are required, right? So this is eligible under section 35(1)(2)(a). Previous one is 35(1)(2). This is 35(1)(2)(a). Okay. And what is the quantum of deduction? That the quantum of deduction is the entire amount is eligible. If I am contributing 1 lakh rupees to that company for doing the research, then entire 1 lakh I can claim it as the deduction. Entire 1 lakh I can take it as the expenditure for my business. Debit side I can take in P&L account. Then another one is that nature of expenditure may be revenue or capital. And another one important point we should note it down, whether the research is eligible, whether the research is related to your business or not. If it is related to you or if it is not related to you, both the things are eligible. Both the things are 100% eligible. Then next fourth one point we should know. See, in the third point, the prerequisite conditions are the company should be registered in India. It should not be a foreign company. It should be a Indian company registered in India, right? So then we can claim the deduction. Then fourth one point is contribution to outsider, research related or not. Whether that research is related to you or not, that expenditure, nature of expenditure is capital or revenue, that is also 100% eligible, right? Then, so one common factor you can identify in all these things for easy understanding. What? All these things are 100% eligible, right? Another one point we are going to study, that is social research. Any amount of contributions made for social research, that is also 100% eligible for deduction, for claiming the deduction. So why we are mentioning that 100% eligible as deduction? Because 100% eligible in the sense it is eligible. What is the quantum of eligibility? The quantum of deduction, that is 100%. If I am contributing 50,000 I can claim it as the deduction, right? See, what is the purpose of stressing this point of 100%? Because previously we had the condition for a certain type of research 200% eligible, for some other category 150% eligible for the purpose of promoting the research and development. Whereas now it is revised, the condition is amount spent on that 100%, it is fully eligible as deduction. Okay, so we should know what is a scientific research, what is called revenue expenditure. Capital expenditure we have to discuss. What is called the revenue expenditure, and under section 35(1) and 35(1)(2), then 35(1)(2)(a). In these categories, what is the quantum of research deduction, up to what extent we can claim the deduction, right? What are the conditions, prerequisites for claiming the deduction? What are the quantum of deductions available under this category? These things we should keep in mind for solving the problem under this.